and welcome to the MLS, the Mortgage Loan Show. I'm Meg Sahagian, your host, and I am super excited today to have private banker Rick Sanchez with us. Rick, welcome.
Hi, Meg. Well, thank you so much for having me here. Really excited to be here.
Absolutely. We're so excited to have you. And here's the thing, everybody. Rick has helped to secure nearly $500 million for his private clients. So I'm so excited to talk with you and address all of your mortgage loan questions. So Rick, here's the thing. We're in this kind of challenging, changing time right now, and we're super curious about how the industry has been affected in this time. But to start, could you give us a little bit of background into how you got started in this industry?
Sure, absolutely. So you're right. It's challenging times, and we'll get to it in a minute. But the way I started in the mortgage industry is actually right out of college. I started working for a big bank in their finance department. And in that division, what we did was specialize in consolidating debt. So whether it was credit card debt, auto loan debt, or personal debt, we would have clients come in, we would look at it, we would restructure it, and then we would offer a solution, right, for them to get debt free and save a lot of money and interest. Now, looking back on that, that actually was very, very helpful for what I'm doing today, which is strictly residential lending. It gives me an opportunity to analyze the whole picture and not just the transaction, right, that they have in mind. So in about 2012, I went 100% dedicated to only residential lending. And since then, haven't been looking back.
That's great. That's awesome. So you have the background in helping folks, consolidate their debt. I know I have personal experience with that, and it was a huge relief at a time when I felt like I just could not keep up, with the amount of kind of debt I was accruing. So I'm curious to hear from you. What part of the job do you enjoy the most in terms of helping people secure loans?
So being in the industry, whether it's real estate, being a realtor, or being a mortgage originator, sometimes we forget how important a home is to everyone, right? It might be the largest asset that they will ever accrue. So just knowing that we're able to help people obtain a house, right, become one step closer to financial independence. But also, it's not just about purchasing a home. Like I said, sometimes people would obtain a mortgage to either pay for college for their kids, pay for a wedding for their kids, or just take a step back and say, I need to restructure my debt. What other avenues do I have? And sometimes it's mortgages. So it's very fulfilling to help people in that way.
That's great. So do you have an area that you specialize in that you would acclaim that you're an expert in this field?
So when I started working for mortgage, I was lucky enough to work for what's called the private mortgage division. So this is, and all banks have it, this is a section that we service the private bank clients. That means that anyone who has over $1 million with the bank, they go to this exclusive division and they get different underwriting, different rates, and so on, right? So I specialize with affluent clients who have complicated financials. I specialize with clients who are self-employed, who have multiple businesses. So I try to help them in that manner where their finances are already complicated. So I want to make sure that it's easier for them. They focus on what they're good at, what got them to be in the position in life that they're at. And I take care of the mortgage for them.
Okay, interesting. So since you work with these kind of, higher net worth individuals, I'm curious to hear from you. This year with the global pandemic, things have definitely changed. So how have you seen the pandemic affect the industry?
Right. It's such a crazy time, right? Typically in mortgage, when the stock market's not doing well, interest rates go down. And typically when that happens, people rush to refinance their home to pay less interest, right? That happened and it was overwhelming. I think all lenders and banks were overwhelmed with the amount of applications that we got for refinances. So looking at that perspective, it allowed people to either lower their expenses and go invest in something else, perhaps buying another house, right? Or just applying it in a different manner. But the other thing that was very interesting about the pandemic was that purchases did not slow down. And in some cases, it actually increased. So in a way, it was mind-boggling because you see that a lot of people are losing their jobs. There's a lot of uncertainty in the economy and how we're going to, right, how it's going to be moving forward. But because rates were so low, I think it encouraged people to take that step and purchase, whether it was their first home or an investment property. So the pandemic has, it's given us a lot of business. And I always have to remind myself, no matter how busy or how stressed I am, I just think that there's a lot of Americans out there who are not employed. And, so for that, I'm grateful.
Absolutely, absolutely. Me too. So let me ask, because it seems like in the pandemic, like you mentioned, right, folks are using their money and taking advantage of the lower interest rates in purchasing properties. What are some of the biggest challenges that you've seen this year, and then I would say prior to COVID, when folks are looking to either secure a mortgage or refinance their homes?
Right. It's usually the same thing. Um, Again, if it's their first purchase, then they just don't know what to expect, right? They know they want to buy a house, and they know that they've saved money, but they don't know what comes next. So typically, what I see is that there really isn't a good line of communication with the buyer, the client, and the lender, right? So what I focus on and what I tell my clients and encourage them to do is make sure that you find a lender, a mortgage originator who's going to communicate with you along the process, right? Nowadays, there's a lot of paperwork that's associated with mortgage loan. You need a lot of income documentation, and then the lender will provide you with a lot of disclosures. That can be very overwhelming, right? So one of the things that I did and my team did is we created what's called a client success portal. So in this portal, we walk our clients through every single step of the way, right? From beginning to end, we encourage questions and we're connected with them on a weekly basis. So that's just the challenge, is what to expect and making sure that they have a good line of communication with their lender.
Okay. So I know you mentioned, having a great relationship with your mortgage originator is super important. Is there
Mhm.
anything that, any tips or advice you could give to folks that are maybe looking to vet mortgage originators? How can you vet them?
Great question. So I always ask whenever I look for any other service, right? And this is how I coach my clients. Ask them questions. Ask how they deal with the process, right? How will they be providing updates? And if they can provide, some feedback from clients who are very happy, or just, some recommendations like that. So just ask questions. I think in our industry, that's not done enough, where if you go buy something else, sometimes you'll ask for a reference, right? For how their clients see them. And I think that the same should be done with us.
Absolutely. That's great. So, I think in looking to secure a loan, it can seem like a very intimidating process, right? I also think there's a lot of misnomers and myths out there about how to secure a loan. There might be a lot of false information flying around where folks have the money to invest, but they kind of pause, right? Because they're believing what they hear out in, through friends or family, and it seems like too much of a daunting process, right?
Right.
So could you give us some insight into what the biggest misnomers and myths are out there, and then just clarify those for us?
Of course, I think this has been a biggest misconception for many years, which is if you want to buy a house, you need to have at least 20% down. In the past, you thought, I want to buy a house, I need to save 20% of whatever that purchase price is going to be. And that simply is just not true anymore. In the past, there has always been a low down payment option, which was a government backed loan, what's called an FHA loan. And in many ways, that type of loan created a lot of paperwork for the buyer and also a longer process for the seller, right? So if you want to buy a house, the seller sees that you want to buy with an FHA loan. And although they shouldn't discriminate about that type of loan, but they just, in their mind, they thought, oh, wow, this is going to take longer to sell than what I thought, right? So now that's not the case. You don't need 20% down. you don't need to go with a FHA loan. There's a lot of lenders out there who will give you a loan for only 3% down.
Oh, wow.
And that 3% down loan option, that loan is just as good as a 20% down or a 30% down or a 50% down. A loan's a loan, right? And if you're going to be approved for that loan, it's just as good. The other thing, which I'm very passionate about, is when home buyers or shoppers, they submit an offer, right? They see a house they like, and they're going to submit an offer. In that offer, I think the biggest misconception is that you want to say that you can put as much down as possible, because in the eyes of the buyer and their agent, they see that as you're a really strong candidate, right? So the reason why I say that's a misconception and I'm very passionate about is because now lenders will fully underwrite your loan before you even find a property. So they'll say, Meg, you're fully approved, or I'm sorry, conditionally approved for this loan as long as you meet these basic minimum requirements. We call them conditions. As long as you do that, there's no reason why we won't be able to move forward with this loan. So when a shopper goes and submits this offer, they could say, not only am I pre-approved, which is a condition for you to submit an offer, not only am I pre-approved, but I'm fully approved and I can close in 30 days or less, right? So because of that, whether you're putting 3% down, 5% down, or 50% down, it doesn't really matter. The loan is secured. But still in our industry, they see, oh, less than 20%. Ooh, it might not be as strong as, as a 20% type of loan. And I know I'm throwing a lot of numbers out there. The message is that, listen, you could buy a house with less than 20% down, and you can be as strong as someone who is putting 20% down.
That's great to know. And I bet that's a huge relief for some folks out there who feel intimidated by the 20% mark. I know I myself, in looking for properties, have always seen that 20% as a bit high, right? So it kind of steers you away from wanting to move forward in the process. So I'm curious to hear from you a little bit more detail about the basic conditions that you mentioned. Could you give us more insight into what those basic conditions are in order to get approved for a conditional loan?
Great question. So we must keep in mind that when an underwriter looks at your loan application, they'll say, it's like taking a picture of your finances at that moment, right? And they'll say, as long as this picture doesn't change, by the time you get to the finish line, then you'll be approved. Some of those conditions, of course, is, you must keep your job. You don't make any large purchases. That's one of the mistakes that I see some of our borrowers do, is they're in the middle of a loan transaction and then they go and buy a new car, or they're at a Macy's or a Nordstrom and there's a promotion and they offer them a credit card and they open up that credit card. That's something that you should not do. So those conditions, the reason why I said they're very simple is because, again, it's just really about, don't change this picture of your finances for the next, 15 days or 30 days, however long it'll take, and you'll be approved. The last condition there is an appraisal, right? If you're purchasing a property, if you're going to buy the property, the bank wants to see that it will appraise for the purchase price that you're buying it for. Other than that, it's pretty simple.
Okay, great. And thanks for providing that clarity. I think it's really helpful. And also, in terms of just changing your financial status throughout the process, I know you mentioned something like don't go buy a car, but also don't go and open up a store credit card. So it's really kind of the whole gamut, right? It could be as simple as don't open up a store credit card and don't make a very large purchase.
Right. Mm-hmm.
Okay. All right.
Yep, absolutely.
So I'm curious to hear from you, because there's a lot of folks out there, who are independent contractors. So maybe you're 1099 versus having a W-2, who are self-employed. How does that affect their status? Those folks that are either independent contractors versus being, W-2'd by a big corporation. How does that affect their status in applying for a loan?
Since 2010, that has changed drastically, I would say, for the better and the worse. So when you're self-employed or you're 1099, What a lender will look at is what is your history of income over the last 2 years. Okay. So they'll say, based on the last 2 years, how much income are you taking home as a person, not the business, but you as an individual, how much are you taking home? And based on that, typically what we do is we take an average and we say, this is an amount of income that we're comfortable with and that we think that you will continue to receive in the future, right? So for self-employed 1099 independent contractors, what I tell them is get ready to show 2 years of tax returns. Hopefully you also keep your books up to date for the year where you don't have a tax return, because you're going to need to provide that. And that brings up a good point. When you're interviewing a mortgage loan officer to work on your loan, you want to make sure that they have the experience of analyzing those tax returns, analyzing those either the Schedule C or corporations or partnerships. Just be upfront with them. Let them know, listen, I'm self-employed and I would like to know that you have experience in that. The reason why is because you want to make sure that they understand your finances before the loan gets even submitted to the underwriting team, right? What I see some of these business owners, their frustration is that they take a loan application, everything seems fine, and then 2, 3 weeks later, when the loan gets to the underwriter, who knows how to analyze tax returns, they review those returns and they say, wow, we have a problem, right? So all that time, all that effort is wasted. And, so that's one of the things. Ask them upfront, have you experienced, do you have experience working with self-employed people?
That's great. That's super helpful. And I think, in any situation like this, like transparency is key. Both
Right.
you yourself as, the business owner, and then also the mortgage originator, just making sure that you're having that open line of communication to discuss this.
That's very true. So I'll tell you that one of the reasons why I've become so successful is because if I don't know, I'll raise my hand, right? And I'll say, listen, I just don't know the answer to that. But early in my career, when I wasn't experienced in tax returns for business owners and so on, I would then go and refer it to someone who was, right? And in the eyes of my client, one, I showed that I was honest, but two, that I was proactive and I went to go get help, right, for him or for her. And that was very helpful in my career.
Absolutely. Sometimes it's super hard to just say, I don't know, right? Like you feel intimidated by the process and you're not sure if you can ask certain questions because you don't want it to affect you negatively. So I'm glad that we're speaking to this because I think it's super key in the whole process that both parties involved are just being super honest, with each other and being able to clarify anything that might be a bit of muddy waters. I could see just being
Correct.
a really helpful part of the process.
Right.
For sure.
Mm-hmm.
So let's talk about credit. This is something that I'm interested in. I love my Credit Karma app and checking my credit and kind of competing with myself to get my highest score. How important is your credit score? And are there any tools out there that you would recommend for folks to utilize to stay on top of
Right.
their credit?
Right. Credit is very important. Credit really tells an underwriter, a bank, your history of how you pay your bills on time, right? Or you don't pay your bills on time. So that FICO score is very important. Although it doesn't tell you the whole picture, it's just like your first impression, right? When you meet someone, you want to make your best impression up front. One of the things that I tell clients is that if you're interested in buying a property, you want to make sure that you check your credit first. What's there? Are there any errors there? You'd be amazed how many times I've seen some bad credit on someone's report because either the lender made a mistake, the company made a mistake, or it was something so simple as, it was a medical bill that should have been paid by my insurance, right? So there's ways of fixing that, of contesting that, and making sure that your FICO improves. You mentioned Credit Karma. So Credit Karma is a great tool that you can use to keep up, to learn about how you should manage your credit cards, how you should manage, just credit in general. And one thing to keep in mind is that all of those credit companies, they give you an estimate of what your FICO score is. So when you do go and you apply and they actually pull your credit, don't be surprised that it won't be the exact number that you see there. That's one thing that I always get. People say, hey, listen, I checked and it was, X, and you're telling me it's a little different. It's only because those companies are not really tracking your credit. They're making an estimate of what your credit should be based on the information they have in front of them. But yes, rely on that. It's very educational, and it's something that's going to help you in the future.
That's great. No, thanks for that information. And, I know that you mentioned if there's anything on our credit report that we see that we think is, a little bit off or not right, maybe a hard inquiry that wasn't ours. Any tips on how we could work to resolve those issues?
So yes, of course. So whoever pulls your credit, they are obligated to give you a copy of that credit report. And on that credit report, you'll see the phone numbers of all your or all of the companies that who you owe money to, right? Your debtors. And there, just give them a call and ask for information of how that inquiry or how that negative account showed up on your credit report. And then make sure that whoever you speak to, get their name, get their phone number, because you're going to be calling them after you hang up with them, right? So just get the information and then take a step back and think to yourself, what occurred during that time? Was that really my account? Was there, did I make that payment? So do your homework and then call them back and try to resolve it. And then once you do that, there's a process that's called a rapid rescore, meaning that you provide the information to fix the item that was on your credit report, and then they will recalculate your FICO score. Hopefully it'll increase.
That's great. Thanks so much for those tips. I think that's super helpful. And I think in terms of the process, right, we're talking about the first steps in terms of, looking to secure a mortgage loan. Could you just give us your recommendation of what those first steps should look like in the process?
Sure. Sure, of course. So what you want to do first is make a list of all of the payments that you make, all of your debt, right? Your utilities, your car payment, credit card payment, even things such as groceries. If you go to the movies, how much money are you spending on that, right? So you want to know what your monthly budget is.
You want
Okay.
us to get that granular?
Yes.
Okay.
Know what your monthly budget is. Okay. And then once you know that, then you determine, okay, how much money do I want to spend on my house on a monthly basis, right? Okay, so once you do that, what you want to do is this going to affect my quality of life, right? Because what I tell my clients is, yes, a house is an investment, okay? And sometimes when you make an investment, you have to make sacrifices, no doubt about that. But also, you don't want to be what I call house rich and cash poor, right? You want to remember that this is a house that's going to be your home, and you're going to create great memories with your family and friends. So you want to make sure that you are also having fun, right? Your quality of life is there, and you have the opportunity to buy a house. So do that first. Once you do that, then go look for a lender. And then the lender will tell you, based on the information that you've provided to me, you should qualify for X amount. I'll tell you that 9 out of 10 times, people are approved or qualify for a much bigger loan amount that they would care for, right? And that can be tricky, because if you don't do your homework about your budget, about your quality of life, of what you want to pay on a monthly basis, you may just think of that big loan amount that the bank provided, and you'll say, great, now I can buy even bigger house, right? Or in a different location. And then you go and you do that, and then you realize, wow, I maybe should have taken a step back, and maybe I didn't need such a big house or such an expensive house, right? So do your homework, then go get pre-approved for your loan.
Okay. That's great advice. And I think it's super important that people are just really honest about where they are, right? Like, meet yourself where you are in terms of your finances. When you look at all the money that's going out every month, really being honest with yourself about what you can afford and staying within that budget sounds like it
Right.
is the way to set you up for success.
Of course. Of course. Completely agree.
All right, that's great. So, anything that folks should be super cautious of when starting the loan process?
Sure. Just know that it's going to require a good amount of paperwork. So again, some of our clients, they don't do, or they don't apply for a mortgage loan too many times in their lifetime, right? Perhaps it's just a purchase and you refinance one or twice, and then you're done. So a lot of the paperwork that's going to be required, such as pay stubs, W-2s, tax returns, bank statements, this is all the information that we all get, but really we don't really analyze. We don't know where we put it, right? So just be aware of that. There's going to be a good amount of paperwork that's going to be needed. Be prepared, gather that documentation, and send it in a timely manner, right? So in a mortgage process, all lenders have a certain amount of time to take your app, to give you a decision, and to close the loan. And they need your help to provide that information as fast as possible so they can do their work as well, right? So just know that it's going to create a little bit of work for you, but trust me, in the end, it'll be well worth it.
All right, that's great. Well, Rick, I can't thank you enough for your time today. I think that you have gone over some really key highlights for folks that are looking to secure mortgage loans. I know I've learned a lot, so thank you so much for joining us. If people out there want to contact you, is there an easy way to contact you where you could provide some more information on how to get in touch?
Of course, of course. Thank you so much. It was really fun. Thank you for having me. If you guys are interested in learning more about me, please visit successwithricksanchez.com. Again, that's successwithricksanchez.com. This is Rick Sanchez. It was a wonderful time. Thank you so much.
All right. Well, thank you so much, Rick. And that concludes this episode of the Mortgage Loan Show. If you want to check out more episodes, head on over to www.mortgageloanshow.com. Thanks, everybody. Thanks, Rick.
Bye.